In the 27 years I've been in business, I have heard every excuse under the sun about buying a home or what people have done during the process of buying a home. Changing jobs. Oh, I didn't know I wasn't supposed to change jobs. Changing their banks. Buying that refrigerator at Lowe's before closing and putting it on a credit card. Or better yet, buying a new vehicle. I didn't know that I couldn't buy my Bentley now. So there are things that happen during the process. When you are getting your home loan processed, you do not want to do a number of things. If you're new to my channel, my name is Dianne 𝐸ala-steffey. I am a mortgage loan expert, a passionate mortgage loan expert. I work with clients to educate them on the various financing options available to them. If you're going to buy a home, there are 10 commandments you must abide by. Change jobs, buy a vehicle, use credit cards, spend your savings, buy furniture, credit inquiries, make large deposits, change banks, become a co-signer, and do more purchases. Let's go through and explain some of these in detail. So if you're going to change a job, please be sure to contact your mortgage expert or your mortgage loan officer to let them know. Communication is very, very important. Now, if you're changing jobs and it's to your benefit, meaning that if it's the same line of work, or if it's going to be more income to you, better scheduling, then great, that's not going to be a problem. But if you're a W-2 employee going into a 1099 income type, which means self-employment, we're not going to be able to do a traditional type of loan for you. 2, buy a vehicle. So if you're looking to buy another car, that's an added payment. Or if you're looking to trade in for a lower payment, then that's okay. But if you're buying a separate car, an additional car, that can actually adversely affect your debt to income ratio. Open up new credit cards. That's a big no-no. When you open up new credit cards, you open up new debt. And so that debt will mean that you may have a possible debt to income ratio problem, or that's just telling us that there's more debt that we have to consider in our loan. So we don't want you to go out and get new credit cards. That's a big no-no. The 4th one is spending your savings. If you have money saved aside for your down payment and all of a sudden you spend it for whatever reason, that complicates the whole loan process. That puts us back to square one as to where are you going to come up with that money for your down payment. So please don't use your savings if that's been pegged for home ownership. On buying furniture, we know that that's the kind of the most exciting part of getting a brand new home is getting brand new furniture. But don't open up new credit cards to buy new furniture until you've actually closed and funded on your home loan. New credit inquiries alerts us when you apply for new credit. Doesn't matter what kind of credit, you've applied for new credit, and you're going to have to answer as to why or what type of payment, if there is anything new that you've opened up. Large deposits are big red alerts for us in the lending business. When we look at large deposits, we want to know, where did you get that? Because everything in our industry has to be sourced and documented. Now, if it's a gift, then we'll provide you a gift letter to document and source that as well. But anytime you're thinking about putting in or depositing a large deposit, you need to communicate with your mortgage loan expert to make sure they know where that particular money is coming from. Changing banks. Oh, please don't do that. We have to get the last 2 months of your most recent bank statements. And if you change the banks and you have large deposits and we can't document it because you took out money as cash and then deposited it into your brand new account, that's not going to give us the accessibility or give us the information that we need to source and document it accurately. Becoming a co-signer. Again, we need to determine who is going to be co-signing on the loan. We can't just assume who that particular person is, because we also have to qualify that individual just as we're going to qualify you as the primary borrower. Now, purchases. If you're applying for another mortgage, or if you're buying another property, Or if you're buying a car, if you're buying anything, we want to know about it, because if you're buying something such as another house, we want to make sure that, first of all, that liability is included in your debt to income ratio, but we need to know what that purchase is about. The reason that this 10 commandments was created was because, believe it or not, I have experienced it in my 27 years of being in this mortgage business. Every single one of these commandments, most people have done this. Let me simplify the mortgage process with you. Contact me by clicking on the link in my bio and book a call with me today.